we have a big week ahead of us. The FOMC meeting, the official statement regarding rate cuts will be coming out tomorrow. And even though there's pretty much a non-event and it's all priced in, there is going to be a lot of volatility for this upcoming week because of the futures expiry, because of the war situation. And there's also very positive news coming from strategy and ETF flows, which are all turning green and heavily accumulating. So it's definitely a mixed signal in the market right now for the short term. However, for one long-term signal that is very promising and has very high hit rate is firing, and that is the hash ribbons. So that's the main topic I want to cover for today. The hash ribbons usually leads before minor capitulation happens, which then itself leads the low of the cycle on Bitcoin, the Bitcoin price bottom for the bear market. So we will discuss what this looks like right now. And just on yesterday's live stream, when we checked the hash ribbons signal, this actually started to fire a buy signal. And that's why this is actually a new development that I have been tracking. And now it is playing out. So I want to give you guys the full update on what this is. Okay, let's go ahead and get started. So really quick, before we get started, I know I said earlier to you guys that for a specific group of you, you will be very interested in the episode tomorrow because I will be joined by Zach Folkman and Jia Yi from Y Strategy on the live stream tomorrow. And for those of you who don't know, Zach Folkman is the co-founder and COO of World Liberty, and I met him at Mar-a-Lago last month at the World Liberty Conference. And we will be discussing everything around World Liberty on a live stream tomorrow. It's not going to be this usual time. It will be earlier in the day. I will put out a full post and the full schedule for you guys later. But there are a lot of things that I wanted to ask him, and we will be collecting community feedback as well, community AMAs. So if you have any questions, leave them down in today's chat, and also on our later posts on YouTube and on X, there will be teaser posts that you can comment on what you want to ask Zach about. And also, I will be speaking with Jia Li, who is the founder of Y Strategy. They are the main marketing agency that are handling all of the activities on social that you're currently seeing from World Liberty. So we will be talking with her, and she has a very good understanding of the Chinese community and how they react to World Liberty, because this project is actually very big in China. But that's a completely different audience that you guys might not have been exposed to before. So look out for that interview live tomorrow. I don't think I have done a live interview before. Will be very interesting. So we will stream this here on YouTube and on X, and there will be recording and clips as well after. Make sure to join, and especially if you're a fan of World Liberty, I know a lot of people always comment and ask. This is your time. This is your time to get your questions asked. Okay. So let's get into the agenda for today. So first, we got to cover the upcoming FOMC meeting. So the next FOMC meeting is in 1 day, 23 hours. And there are some headlines that are coming out now saying, hey guys, there's not going to be high hopes of a rate cut, and that's going to hurt the market. Well, I want to tell you that this is not going to matter as much because it's all been priced in. We have been tracking this actively, and ever since last month, there has been 90% plus probability that everyone expects there to be no rate cut. And today, there is a 99.5% probability that there's no rate cut. So unless Jerome Powell comes out and just surprises everyone and says he's going to cut, you don't have to worry. If there's no cut, nobody will care because everyone already expects it. It's priced in. And this is, of course, because the Fed is trapped, because they have a stagflationary environment where unemployment is high, but then inflation is also high. So they have to balance the dual mandate, which means they can't do anything. So the main thing that we do want to watch out for on the next FOMC meeting tomorrow is this star sign there. That's the summary of economic projections. So yesterday we covered this a little bit. What the SEP looks like is something like this. You can check this on the FOMC website yourself. You look at the December one, this also had a SEP included, and you go to the projection materials, you will have something like this. So this is called the dot plot. Tomorrow we will have another new release of this dot plot. And what this tells us is the votes of the Federal Reserve's Board of Governors, their economists, and what they believe their targeted interest rate should be by the end of 2026 and the end of 2027. And this changes every 3 months. But this will be the big thing to watch tomorrow. Why? Because right now, all the Fed's decisions have been priced in. From now until June, there's 64% chance that there will be no rate cut. And then also people expected there to be just one rate cut. How many Fed rate cuts in 2026? You see, highest chance, 30% chance, one rate cut, 22% chance, two rate cuts. The difference between 1 and 2 is not that high. That's the thing. And also because we have equally high probability, 22% chance of no rate cut for the entire year. That's why this dot plot will be very important. We are in essentially the worst time right now. We have war, we have high inflation, high unemployment. The easy thing for the Fed to do is to just say, hey, we can't act, so don't expect us to make changes. And that will show up on the dot plot if they put the average of the dot plot to be around the same as the current rate, which is 350 bips. So that's right in the middle here. But if the dot plot changes lower, let's say it moves towards 3.0, all of a sudden, the markets, from prediction markets, from CME Fed Watch, will start to price in many more rate cuts by the end of the year. And that will have a forward-looking positive effect on the market, even though the rate cuts haven't happened. And this is the main thing that impacts risk on assets. It's forward-looking. It's how many rate cuts can people expect. It's the sentiment. So that's why if you are going to watch anything, it's the dot plot for tomorrow. I think this is the main thing that could drive the market a little bit up if there is a lower target for rate cuts. On top of this, we have some other volatile events. Let's first cover the negative. So Citigroup has just come out and lowered their 12 months Bitcoin price forecast from 143K to 112K. Now, it's very weird because we're trading at 74K. The reason why all of these Wall Street giants are coming out and making these random predictions while the current price is low is because we are in a bear market and they know. So you remember last week we covered, super cycle, this one, Fidelity and VanEck, and how they both, even the CEO of VanEck came out and said that they expect the bear market bottom to be in. And then Fidelity made a whole piece saying it's super cycle, even though both firms agree that right now we are in a bear market. Why do they all do this? They want receipts. They want to make these posts publicly and call for a high price in Bitcoin because they know eventually it will happen. And if they can make those time-stamped posts when Bitcoin price is low, it's very easy for them to, claim more clout later on, which is what they want. They are investment funds, investment banks. So Citi also said that if there is a recessionary macro backdrop, which is from war, from note rate cuts, etc., then Bitcoin could drop to 58,000 and Ethereum to 1,200. And then with its bull case after, it could go as high as 165K for Bitcoin, which they now adjusted to 112K. So basically, it's a lot of nothing burger. It's just like the way we analyze the market. It's not like these guys are any smarter. Basically, what they're saying is just like what I said. If the market continues to be bad because macro is bad, then the bear market could repeat and we drop to 58K to the 200-week simple moving average before eventually end of the year or next year we head above 100K. We can all make those statements, and that's a very conservative statement. So these investment banks, the kinds of analysis they put out is actually just like crypto analysis, which is kind of funny the way I like to think about it. I understand their psychology very well because I know why they want to make these claims. It's because prices are low and they know the downside risk is low enough that if we drop to 58K, they can make a bottom call and then price will go down maybe 20% below that, which they are perfectly okay to stomach for a couple months of, backlash before inevitably Bitcoin goes up much higher. That's my expectation as well. So I understand why they do this. They're thinking like a content creator. Now, the other real short-term volatility event is the market turbulence with the expiry of stock market options and Bitcoin options and CME futures by the end of this week and by Friday next week. So we covered this yesterday, how you should prepare for a volatile week in Bitcoin. Long story short, there are a lot of options expiring. Well, to add on top of that, the S&P 500 has its rebalancing, the quarterly rebalancing, if I'm not mistaken. Don't quote me on that yet, but I remember they rebalance quarterly. That will be happening on March 20th, which is, again, this Friday. So this week, there will be a lot of volatility by the weekly close on the traditional stock market. So be careful. Okay, and then let's talk about some of the positive fundamental news. So first of all, we've been tracking the Bitcoin ETF flows, and we covered how since November of last year, there has not been positive inflows on a monthly basis on Bitcoin ETFs until the war happened, until February 27th. And you can look at the daily here. Let's look at the weekly. The week of February 27th, positive, 4 weeks of positive now. And opening of this week has also been positive. So from Monday's number, yesterday's number, there were a total net flow of 200 million going into the Bitcoin spot ETF. This is very nice. So the ETF institutions are buying the dip right after the war started. You can take it however you like, but usually in the uptrend, they like to buy tops. But it does seem like they took the most amount of money off of the table during this big correction period from November until February. And this is the first time that ETF institutions have started to buy. The other main buyer that's really starting to come back is Strategy and Michael Saylor. So we covered this also last week here on Saylor Tracker. So just last week, Saylor bought $1.28 billion. Well, this week, he bought more. He bought $1.57 billion more yesterday. These are two of the biggest bubbles. You see right here that he has used money to buy Bitcoin. Two of the biggest. You can track his entire history. And this is closely related to Michael Saylor's push in one other new instrument, relatively new instrument called STRC. So here, STRC. Let me get the exact name of STRC. It's called Stretch. So I'm still doing deeper research on this, but long story short, Stretch is a dividend product that sits on top of Bitcoin. Basically, Michael Saylor promises people 11% dividend per year. And with that money raised in this instrument, he uses it to buy Bitcoin. So as long as Bitcoin on average can go up more than 11% per year, he's in the money. And the yield can be sustained. Now, you can like it or hate it. Obviously there's going to be people that don't like it because all yield needs to be productive, etc. But still, I need to do more research on this. But there does seem to be a lot of interest, at least right now, on STRC because Michael Saylor's strategy does have 2 years of runway just in cash. We covered this as well on the Saylor video. Where's the Saylor video? Right here. Whether MicroStrategy will be forced to sell. Long story short, they have enough cash to cover all of their dividend, all of their loans until end of 2028. So even if Bitcoin price does not go up at all, none of the dividend-based products that Michael Saylor currently offers, strategy currently offers, will run out of cash. And they will not be forced to sell any Bitcoin before the end of 2028. So a lot of people are now coming in and saying, hey, as long as we will have a new Bitcoin bull run by the end of 2028, let's say in 2027, this new wave and this new type of product does seem like it could work. It is running against the clock, but the clock is relatively far into the future for 2 years. I will keep you guys updated on this with a full video later on. Okay, so that's the positive side. Both the ETFs and strategy have been buying Bitcoin very aggressively. And now, finally, aside from the short-term stuff, there is one main signal that has fired that usually marks Bitcoin's price bottom very closely in the bear market. And that's the hash ribbons. So we covered this a little bit already on yesterday's live stream because someone asked about it. And I did find out that the hash ribbons indicator have started to fire. You see down here, the buy signal has started to fire. Now, how does this work? So the hash ribbons is invented by this firm called Capitulation, Charles Edwards. And even he himself has said that Bitcoin hash ribbons are indicating that current prices represent a long-term buying opportunity. Now, I'm still trying to track down the exact source of his statement here. When did he make this statement? What hash ribbon triggered was he actually watching? And what are his proofs from previous bear markets that indicates current prices are a good long-term buying opportunity? But regardless, Capitulation Investments is the exact provider of this indicator. You see Capitulation Investments, hash ribbons. So all the hash ribbons indicators that you see across most platforms use this. It's not proprietary. It's just based on market data. It's all public. But the calculation is based on this exact algorithm. So how it works is it takes the 30-day moving average of the hash rate and the 60-day moving average of the hash rate and sees when the short-term hash rate falls below the long-term hash rate. When that happens, you have the firing of the capitulation signal. And then when it turns back up, you have the buy signal. Now, the trader's way of using this is like this. So when the short-term hash rate drops below the long-term hash rate, that means hash rate is going down very quickly. And this means a lot of Bitcoin miners are getting forced out of the market, aka miner capitulation. You guys have heard of this term before. Bitcoin miners, as some at some point, if you are not mining efficiently, in the bear market, it's no longer profitable for you. So you turn off your machines, and then other bigger players with more efficient setups, they come in and take your place. That's why the hash rate in general, you see these two lines, they keep trending up. They don't trend down. But there will be periods where it makes a local bottom. So when that happens, usually that coincides with a minor capitulation, when the hash rate is at a local bottom, and when that local bottom in hash rate happens around the same time of the bear market price for Bitcoin. So currently, this is firing, and this is more important because we are in a bear market. So the way you can use this is this. When there is a hash ribbons firing, here is a zoomed out chart. Whenever it fires, you have one of these shaded areas in red. When it fires in a bear market, let's say in 2025, that's similar to when it fired in 2022, and then when it fired in 2019, 2020, later in 2020, and then in 2018. So you can take the bear market levels and then try to see the resemblance. Try to see, first of all, when the hash ribbon first starts to show capitulation, that's when prices are still pretty high in Bitcoin. And then in the bear market, price continues to drop lower and lower, like in 2019 when it drops from 6K to 3K, and then the hash rate goes very low. Finally, the minor capitulation happens, and then the hash rate starts to go back up. That's when new miners are coming in. That's the only way for a hash rate to go back up again, because otherwise Bitcoin would just die. Otherwise, nobody would mine anymore, but that has never happened. So a wave of miners capitulate, another wave of miners come in, which replaces them with more efficient mining infra, and then hash rate goes back up. And that's usually a few months before price bottoms. So here you see in 2019, the hash ribbons fired, and then when it turned back into the green, that's January 2019. And then by April 2019, the bottom essentially has been confirmed and the new uptrend starts. And I would say by May of 2019, you can see a weekly uptrend in price here. So there was 4 months of time from the firing of the buy signal on the hash ribbons compared to the confirmation of the uptrend. Okay, and then let's zoom back out again. And then you look at, let's take the clearest examples. So here is 2020 and 2023, 2022 and 2023. So the first time that the hash ribbons fired in 2022 was August 2022. There was another few months of chop, and then potentially 5 months later, it could have already started an uptrend. That would have been in February of 2023, which is up here. But you see, this was still around the same price that when the hash ribbon first fired. So when the buy signal fired, Bitcoin was trading at 21K. In February, or 5 months later, it's still trading at 22K. Only until April did it confirm the uptrend. So the reason why this happened was, well, this was midterm election year, some people say. And also this here, first week of November, this was the FTX collapse. So then you saw another wave of minor capitulation happen, hash ribbons firing again. So long story short, how do you compare the last two cycles with the current cycle? Well, we know that price-wise, it's pretty close. If we get a scenario like 2022, then when the hash ribbon fires the buy signal until the bottom, we're talking about 25% to the absolute bottom of 16K, from 21K to 16K. And then in terms of time, well, you need to wait 7 months. 7 months from after the signal fired in 2022, the uptrend was confirmed. And then if we go back to 2018, then when the hash ribbon fired, price was trading at 3,600 and the absolute low was already in at 3,100. So you could make the argument either way. When the hash ribbon fires in a bear market, especially after it has had 3 months or more of this like long capitulation, there is a good chance that the bottom price has been in, let's say at 61K that we saw last month. Or it could be 25% lower than here, which is, 50K-ish. We don't know for sure, but we do know it's close enough. It's between 0% away and 25% away. And one thing is true, and that is it's not an immediate uptrend. The hash ribbons usually leads to, it means price is starting to recover. It means price is low enough for a new wave of miners to come in to replace the old. And it means later on, after a couple months, the hash rate will make new highs. And that usually correlates with price making new uptrend. But you have to be ready for, what is this? At least 4 months from beginning of January until beginning of April. No, at least 3 months. But as long as 7 months if we have another capitulation event. So if price goes lower, let's say in the 50Ks, it's probably something like 7 months for the full bear market timeline until Q4. But if the price low has already been in at 61K, then we could see the uptrend already showing itself 3 months from now. That's the rough timeline. You can take that and you can start applying your own strategy to it. So if you believe the Bitcoin bottom is already in, you can DCA for 3 months. You can take 3 months and then put all your money to DCA for 3 months. If you think we could still potentially go lower into the 50Ks, you can set a DCA for longer for 6 to 7 months and try to average down a little bit more. But in either case, the bottom price is very close. That's what the hash ribbon says right now. But also in either case, you're not going to see an immediate turnaround because a couple of things need to happen. First, what is the hash ribbon's indicator even? So there are 2 moving averages, okay, on the hash rate right here. Just because the moving averages are crossing, the short-term moving average is crossing above the long-term moving average doesn't mean the minor capitulation has to be over. It only means there are new miners coming in, but it takes time. The only way we will know that the local low on hash rate is in for this bear market is when this makes new highs, is when the hash rate fully confirms a new high and gets higher above the December 2025 levels. So that's not that far away, but it will take a couple months. And here's another way to visualize this. Here is the total hash rate. And you look at this period. Basically, hash rate peaked right around when Bitcoin price peaked in October, and then it has been going down. And in the last week of January, the biggest capitulation in hash rate, I believe ever, in terms of percentage, happened. So a lot of people capitulated here, but then why did it rebound? Well, because other miners came in and they were able to pick up that work. So then, do we make a new low or is this the cycle low? If this is the cycle low, hash rate needs to go back up above this high around, 1 terahash, I believe, and make new highs above here. 1150 E hash. I don't know what E is for the unit. But this will take time, you see, because hash rate adjusts over time, like difficulty adjusts over time. And it really depends on Bitcoin price, and it also depends on how many miners actually want to start mining Bitcoin right now. We know it will happen, but this is the source of truth here. So if hash rate goes back up, makes a new local high, then what you will see is the minor capitulation chart right here that we have followed. It finally print a blue dot. When this blue dot is printed, that means the peak and the trough of the hash rate, of the difficulty for mining Bitcoin has both been printed for this bear market. And when that happens, looking at the last 3 cycles, so when that happens, there is usually a, 5 months, 4 months, or 7 months of choppy period before the uptrend is confirmed, before price heads higher from current levels. So here, 2015, when the local low of the, when the local bottom of the hash rate was put in, 5 months later, price already started the uptrend. Here in 2018, local bottom on hash rate first week of December, and then by April, prices were already trending higher. So that's 4 months, 5 months, 4 months, and then 7 months in 2022, because like we covered earlier, price did not recover very easily because we had the FTX crash, which added another capitulation. So even though the local hash rate bottom, local difficulty bottomed in August, price did not confirm the uptrend until March of the following year. So that was 7 months. So 5 months, 4 months, 7 months, let's say on average 6 months. So let's say when this happens, okay, what's the flow here? First, you will see hash ribbon fire, which we are seeing right now. Okay, it just fired not too far back, February 28th. If you look at some of the other trackers, let's just make sure we confirm what the date is. March 6th. So why are there 2 shades here? So I believe there are 2 shades because here you see the crossover, and this second firing is when the price also crosses the short-term moving average in price crosses over a long-term moving average in price. So that's a double confirmation. That's the original framework that Capitulation Investments put out. So either you can take the hash rate crossover, which was February 26th, or you can take the complete signal, which was March 6th. Regardless, it has fired. After this happens, we should see the minor capitulation happen soon, roughly within the next month, if we don't have more capitulation in the hash ribbons. And after that happens, we have on average about 6 months to go before the uptrend is complete. And within the 6 months period following, Bitcoin price should have bottomed. And that's all we know. We don't know which exact month it will bottom, and we don't know which case it will be, whether it has already bottomed or if it's going to head a little bit lower. But even if it heads a little bit lower, we're talking about 25% lower. That's a signal. That's the real long-term signal that you can use. It's not a short-term trade that guarantees, you buy on the hash ribbon and you sell next month, you're going to make money. No. But historically speaking, you buy during the bear market when the hash ribbon fires, and you are able to hold out the 6 months, and you are ready for a 25% lower price on a 30 to 40% probability chance of that happening, then you're good. After this period is over, hash rate will increase, minor capitulation finishes, and that has always coincided with Bitcoin forming its uptrend and going higher in price. That is what the signal shows, combining hash ribbons and minor capitulation. So take this framework, use it for yourself, and start buying Bitcoin. I mean, that's the main thing I want you guys to take away from this. This is a true long-term signal, and it's another way to convince yourself that Bitcoin is cheap enough, so it's time to hit the buy button. If you like this content, make sure to subscribe to the channel so you get our future live stream pings. Every weekday, I try to go live so that I can talk chop with you guys and really just try to survive this bear market. I think one thing I can offer in this type of condition is to be a perma bull, to look at Bitcoin whenever it drops and say, this is the time to buy. That's one thing I can do because I just have blind belief in crypto for some weird reason. You're not going to get that from most TradFi channels or from people who are pivoting to AI or pivoting to stocks. I'm just a crypto degenerate like that. And if you want day-to-day alpha, make sure to follow me on X at VirtualBacon. You're going to get much quicker information over there, text format when I'm doing these research day-to-day. And lastly, tomorrow we will be doing a live stream interview and live Q&A session with Zach Folkman and Jia Li from World Liberty Fi and from Y Strategy. So tune in to our live stream tomorrow. I will post the teaser and all the topics that we'll be covering in X, and you guys can check that out. And if you have any comments, any questions you want them to answer, make sure to leave them in the comments on X or ping me on X, and we will cover them. We'll try to cover all of them tomorrow. Okay, that's it. Thank you for joining the live stream, and I will see you on the next video. Bye-bye.